Okay, 2022 has been the worst. It's been like a terrible year for stocks. I mean, it's been the worst first 2 quarters since the Great Recession back in 2009. And that was pretty bad. So how am I investing in stocks in 2022? I want to share some of my own perspectives, some of my personal stuff, and just kind of what I'm doing as from an educational standpoint, so you can get some ideas and see if maybe some of these things will work for you, or maybe you're doing the same thing. So we're going to talk about all that coming up in Investing Education with me, Mr. B. Hello and welcome to the channel. I'm so glad you're with us. We're here to help you learn and become educated so you can become a confident and successful investor. If that sounds good to you, hey, do consider subscribing or checking out the free courses and the courses we have in the description below. Now, as far as how I'm investing, one of my big things, I got two big mottos. One of my big mottos is stay the course. I've used that as a motto for pretty much most of my investing life. So when markets are up or markets are down, I'm staying to my strategy. I'm continuing investing. Even though I'm financially independent, I'm still investing. In fact, I'm still heavily invested in stocks. Hopefully I'll have a long life here, and I need to have that growth, even though I'm financially independent, to continue to have that to kind of, finance that. Plus, I think stocks are just a great way to earn, make money, much better than cash, for example. So with that, I'm also have another thought around this, which is being financially independent is just don't do anything dumb, right? That's kind of like a strategy, like just don't be dumb. So I can take on risk. I'm used to taking on risk, but just don't do something dumb. So sometimes I'll pass up on opportunities only because I just don't want to do anything dumb, right? So what am I doing in 2022 as far as the actual, with the stock market portion? So first off, I'm buying, right? I'm such a big believer that when markets are down, that's the time to buy. When others are selling, this is the time to buy. Warren Buffett, other investors think the same thing too. It's hard sometimes because it seems like the world is collapsing in the market, but there are some opportunities there. So one thing I look for is like undervalued, what I might consider value stocks. I have a whole course on buying undervalued stocks or value stocks on the Investing Education with Mr. B website. And I've always done that for a long time. So it's always good to look for stocks that might be on sale or selling at a discount. So for example, I bought some AT&T stock, right, under ticker symbol T, because it was really undervalued. It's price to book value, kind of a feel for, what it's worth as a company, what somebody might buy for. You're looking for a price to book like anywhere from 1 to 3, just to give you a real quickie thing here. But certainly if you can find something under 1.0, means it's really, really undervalued. Real hardcore value investors looking for something that's under a price to book of 1.0. Don't worry if this doesn't make any sense or anything. Just understanding you're looking for these values. So AT&T was at a 0.9, under 1.0. And it was paying a 5% dividend. And it looked pretty confident that it was going to keep paying the dividend and all that too. So pretty solid. I put some money into it. I'm not putting my whole thing in AT&T, but I bought some AT&T, and so far it's been up for me this year because I bought it low, and it's locked in some nice dividends around there too. I'm also considering some more riskier long-term bets, like a Norwegian cruise line, some tech stocks I've been looking at, maybe some safer ones like Apple, buying some Apple. I was real leery about Netflix. I've always been leery about Netflix because of all the new competition. And then early in the year, we saw Netflix stock just drop like a rock because they were losing subscribers. They've had a little bit of a rebound since then, but I thought about Netflix, but if I was going to buy Netflix, maybe I should have bought it 3 years ago. Right now, I'm just still leery about it, but it's on my radar. So I'm looking for undervalued value stocks. The other thing is I'm looking for the help with the financial independence and all that. I like these nice dividend payers. So I'm looking at these nice companies that are solid companies. They're going to survive the bear market. They're going to survive if there's a recession. They're going to survive a crash. And they're going to pay some nice dividends along the way. And you can buy in low, and then you're going to affect your dividend yield. You're going to get a good dividend yield. You're going to get a good percentage on that dividend, and dividends can grow over time. So I've been buying into some Johnson & Johnson, something I've held for a very long time, but there are other pharmaceuticals out there. You can look at Merck, you can look at Pfizer, other ones that are out there as well that pay nice dividends. Utility companies, I own some Xcel Energy, for example, and added more to that, just kind of a nice steady dividend, kind of locking in with that. I've thought about 3M actually over time, still thinking about 3M, but I'm worried about their supply chain issues. Now they had a recent little bump up because they're going to now spin off their healthcare division and split off into a separate company. So that's an interesting type thing. So I might look a little closer at 3M, but I'm still not sure about 3M. I'm a little concerned about any company that might have some of these supply chain issues, though everyone might have that. Certainly Johnson & Johnson may even have that as well. I'm also looking at solid, real kind of safe sectors, right? Especially around things like inflation, that might be, that can do well over, more near-term inflation, but also do well over the long term. I've invested in healthcare for a long period of time, continue to invest in it, been adding into and buying new healthcare exchange-traded funds. I've had the Vanguard healthcare fund for a long, long time. It's done very well for me. As an example, I'm not making any recommendation. I'm saying buy that one. There's no sponsorship, by the way, anything. Just saying what I'm buying. What am I buying? So I like these healthcare funds. I just love that demographic part. That people are going to be aging. They're going to live longer. They're going to need more healthcare. And also this whole innovation aspect around healthcare too. So healthcare has always been something that's been interesting to me. And then I also looked early on. Sometimes you get lucky, right? So, or maybe you're smart. Am I smart or am I lucky? Now, if I was like a YouTuber, it's, oh, listen to me because I'm the smartest person ever. Well, this part might sound smart, but I bought into Chevron, right? A big oil company, right? Big oil company. And bought into that early before the whole Russia thing went down and everything. And we know what's happened with oil company stocks. They've gone up. In fact, I bought pretty low or early in 22, and have really reaped some benefits from that. In fact, I'm up 37% on Chevron. So I guess I should make a video like, my stocks returned 37%. It'd be a total lie. They don't. A lot of them are down because the whole market's down. But that was, sometimes using your smarts and getting a little lucky, that helps too. So I did invest in Chevron. Now, I might be a little late for that. We'll see how that goes as far as getting in now into like oil companies or things like that as well. Also, now that's the buy side, but I'm also doing some selling, right? I'm looking at anything that might have some further downside risk or anything that's really kind of changed my portfolio, something like that. I'm not doing much selling, but I'm kind of doing some strategic selling. If I'm buying Chevron, I actually sold a little bit of an energy ETF, which was very heavy on Exxon and others. And I already had a lot of Chevron, but I bought individual stock of Chevron. So just got a little paring down there, but nothing major. I'm more holding and adding and buying during a down period. The only exception to that is I am doing some tax loss harvesting. Without getting real complicated here, and I have a whole video around tax loss harvesting. Check out the description, it'll be below, the link to it. Check out tax loss harvesting. And the idea is I've had profits over the years. Hopefully I have even profit this year. And I'm using, I will certainly from dividends, I'm going to get a lot of dividend payouts. So that's going to be taxable dividend payouts over the course of this year. So I've sold some things that I'm selling intentionally at a loss, and then using that money to invest in other things that are more attractive to me right now. And I'm going to use that loss to offset my profits from my dividends and other items I have to have a lower taxable amount. So I'm kind of adjusting my taxes downward by doing this. This is a smart part. This is a strategy where I'm using tax loss harvesting. So check out that video about how you can actually offset your gains by your losses, and then you can be strategic about thinking that too. So did do some tax loss harvesting. And mostly I'm just doing a lot of staying the course, one of my mottos, right? Stay the course, right? So I'm holding, staying the course. I've got a good amount of money in cash. Being financially independent, I want to weather storms and have things in cash. So I'm carrying more cash than I ever have in my entire life, only because I want to have that safety net there, for a year or two without even touching anything. I can just save on the cash. Now, the downside, if you're thinking about that, you're like, Steve, dummy, you're being dumb now because inflation is eating away your buying power of your cash. That is exactly right. You're 100% right. Hopefully we need cash inflation to come under control. But really, this is more about a strategy around the safetiness of being able to afford my bills and pay for milk, which is getting expensive, all that. So that's really more of a independent financial independence, early retirement strategy to have more in cash than a typical, let's say, like emergency fund, what might give you 3 to 6 months of buying power by having an emergency fund. I'm really set for several years just in cash. Probably overinvest in cash. And if anything, I can use that cash to continue to buy at certain opportunities. So I'm looking to do that strategically too. But again, back to the part where don't do anything dumb, right? So I can have it in cash and I can weather any storm right now. So I won't do anything dumb. And if we do have a massive or terrible recession, especially a long one that might go for a year or two possibly, I can withstand that without having to sell anything because I've got that cash, safety net. So inflation, that hurts. That just is hurting everybody. That's one thing about like politicians talk about why they're so concerned about inflation because it hurts everybody. It hurts everybody at the polls too. And then lastly, what I'm also doing, I'm watching real closely because it's come down so far, is cryptocurrency. I don't have a big position in cryptocurrency. Again, I don't need to take that risk, and I don't have as long a time horizon. See the gray hair here, not as long a time horizon. But I think Bitcoin and Ethereum, the two main players out there have come down so much that they might be ripe for a rebound in the future. When that happens, I don't know. Might they go further? Good chance they could, but I'm watching those two actually very, very closely. You can look at some altcoins and stuff too, but right now, part of quality, there is quality in cryptocurrency. I'm looking at the major ones, and there's really two big ones, which is Bitcoin and Ethereum. Doesn't mean other ones aren't good. Cardano's good. I think Ripple has some potential, especially as they get through some court cases. But I'm just saying, this is kind of what I'm looking at right now. And then bonds, of all things. Actually, I have a brand new course on bonds. So if you're interested, I have a brand new course on bonds. And with bonds, there's higher interest rates, right? That are happening now. Central banks are raising interest rates. So new bonds you'd buy now are going to pay you a better, higher interest rate, which is a good thing. Now, your existing bonds will go down in value because you can buy new bonds at higher rates, and so that offsets. So without getting too much in the weeds on that, that's kind of how bonds work. But it's a way for me to add a little bit more diversification in my portfolio and get in a nice, safe interest rate or safer interest rate by buying bonds. Particularly, I've maxed out, since I'm based in the United States, USA citizen, I can buy these I bonds, right, and they're paying like 9.62% interest rate that fluctuate with interest rates. So they reset every 6 months. I have videos on that too, on the YouTube channel. Hit the subscription button. There you go, another plug for subscription button. But I bought those as far as maxing that out because it's 9.62% backed by the US government, pretty risk-free. Why not? There's limits. You can only do like $10,000. There's like liquidity rules around it. So you want to understand what you're buying, but it seemed like pretty easy money. So that's what I'm doing now from a broad standpoint. I'm doing some buying. I'm doing some strategic selling. I'm doing a lot of holding, and I'm looking for opportunities because this is the time maybe to buy some opportunities.